everyone, this is your host, Ray Ross, and Everything Money. This is episode 3. Today, we'll be discussing robo-advisors with the exception of one. Now, if you don't know what a robo-advisor is, a robo-advisor is an online automated portfolio management service because these companies use computer algorithms, a set of rules to choose appropriate investment based on your risk tolerance and time horizon and other factors that they put in there as well. They can offer robo-advisor service for a fraction of the cost of hiring a human advisor, a financial advisor. Now, some of these do offer on the phone, email support, financial advisory. Most of them are free with the exception of maybe one or two. What that does is lower the cost for management, combined with features like automatic portfolio rebalancing and tax loss harvesting. And tax loss harvesting is basically making your account more tax efficient so you don't pay a bunch of taxes. Now, that can translate into higher net returns for a lot of investors. The only downfall to this is no human advice and interaction by most of them, but some of them do offer it as well. So let's move right into the robo-advisor investment applications. First on the street is WealthFront, okay? WealthFront. An investment mix covers U.S. stocks, foreign stocks, emerging markets, real estate, natural resources, and dividend stocks. Some emerging markets as well. They do have treasury, inflation-protected securities, and U.S. government, corporate, and municipal bonds. The typical portfolio includes 6 to 8 asset classes, which is great for diversification. Now, the companies think that their methodology includes giving investors a streamlined questionnaire to identify risk tolerance, then employing exchange-traded funds up to 11 asset classes, and they manage $5,000 for free with my referral code that's listed in the description. Now, their website is www.wealthfront.com. Now, in order to open an account with WealthFront, it is a $500 minimum, a $500 minimum. Now, if you're serious about your trust funds, your individual retirement accounts, that's your IRAs, Roth, traditional, and your self-employment IRAs, then $500 is not a big feat. It's not a big amount, especially when you're doing these things for your retirement. They also cover 529 college savings plans for your adolescents, for your teens that you're trying to help them a great start in college and also pay for their college. They offer cash accounts with no charge management fee. On all of their accounts, they have automatic rebalancing that helps with that tax efficiency. They do no fractional shares, but they also have direct indexing. WealthFront management fees. WealthFront charges 0.25 for management, though the first $5,000 invested is free when you sign up and use my referral code. The company's biggest independent competitor is Betterment, but this is not a review of all of these in comparison to itself. This is more of an overview. I'm gonna hit some nuggets here and there so you guys get some really good information about all these robo-advisors. Also charges 0.25% for its digital service. If you invite friends to WealthFront, they will manage their accounts for free up until $5,000 as well as yours. So when you refer a friend and they sign up, they're going to give you an extra $5,000 they will manage for free. And when I say give you, what I mean is that your account, when an extra $5,000 is deposited inside of it, will be managed for free. They're not giving you $5,000, guys. So sorry if I made you confused on that. Now, their promotion is stated $5,000 managed for free for every friend or person you invite and open an account. That is their promotion. WealthFront tax efficiency. WealthFront offers daily tax loss harvesting on all taxable accounts. With new clients, you can transfer assets and it will be a tax minimized brokerage account transfer service. That service incorporates existing investments into WealthFront portfolio where possible and holds transfer securities that can be incorporated until capital gains become long-term. For accounts with balances of $100,000 or more, WealthFront beats up its tax options and is optimization services with stock level tax loss harvesting. It's the basic service that they offer. It's harder to use tax loss harvesting when you're buying an index. So WealthFront replicates the U.S. stocks index by buying the stocks held indirectly up to 1,001 of them. Then the software actually looks for tax loss harvesting opportunities. The tax savings reinvested, which compounds the potential impact of the service. Now, for accounts with balances over $500,000, that's $500,000, the Robo advisor offers technology where it weighs the stocks in a portfolio based on various factors, including low volatility and high dividend yield, to further power potential returns, all for the same advisory fee that applies to all of the accounts. So you don't have to worry about additional costs. These Robo advisors are killing additional costs. WealthFront Financial Planning. It's a free path tool that helps people plan for buying a house, retirement, college, and other sorts of savings. And the cool thing about that, you don't even have to have a WealthFront account to use it. Now, we talked about the 529 college plan. So this is dealing with your college savings. This is another tool that help parents pick the college they want their child to go to, the college projected cost. It estimates financial aid and develops a monthly savings plan. Parents can link an outside 529 college savings account or open one through WealthFront, which is one of the few Robo advisors to offer it. Now, for this particular service, they do all of those things for an all-in fee service of 0.46%. That's 0.46%, depending on the investment expense ratios. WealthFront line of credit, you must have at least $100,000 in your account, and you can borrow up to 30% of the value of your portfolio. And the cool thing about that, guys, if you need that money to start a business or emergency and other sorts of things, then that's a great option. And what is cool is you don't even need an application to do this, okay? You don't undergo a credit check and you don't pay any fees. Yes, no application, no credit check, and no fees when you're borrowing against your own account. I mean, because your account has 100,000 and you can get up to 30% of that. Now, WealthFront is currently charging annual interest rates of between 4.5 and 5.75%. So you will be paying an interest charge. It's your retirement account, it's your investment account. So you put your money in there and they're going to charge you to take your money out. But guys, this is the money world. This is how things do operate. At 4.5% and 5.75%, I would say is a little much. I would think that as a robo advisor, I would want to see anywhere from 1% to 2%. But moving on, WealthFront High Interest Savings. This was actually launched early this year. WealthFront cash account and savings account, and the interest on that is 2.24% interest. Okay, that's great savings. Now, there's another competitors out there where you deal with high yield savings. And if you look at my first podcast, episode 1, I talk about high yield savings. So if you just want to put all your eggs in one basket at WealthFront, you can do that. It's a great service. Or you can use another service that will give you high interest rates. But nonetheless, most notable about the accounts is that through white label agreements with several banks, WealthFront is able to offer up to $1 million in FDIC coverage. And if you heard me on plenty of my podcasts and my YouTube about high yield savings, you're only protected for $250,000. That's $250,000. But with their savings account, because of all the agreements they have with these banks, they are FDIC insured up to $1 million. That's 4 times the amount. If you have that money, then great. If you don't have that money, then it probably don't mean anything to you. And just like any other savings account, your money that's in their high interest savings is not subject to investment risk. I say again, it's not subject to investment risk because it's not an investment account, even though it is with an investment company, but it's a savings and checking account. So investment rules do not apply. The account charges no fees, and clients who also have WealthFront investment accounts will not pay a management fee for money in the cash account. And some of you wonder, well, what if I just want a checking account or savings account with WealthFront? The details are at www.wealthfront.com. Again, overview, not total review. Moving on. Next on the list, we have Betterment. That's Betterment. You probably heard of it. Here's another Robo advisor. Betterment bases its investment philosophy on modern portfolio theories with highlights and benefits of diversification. The company uses exchange-traded funds that represent about 12 asset classes for different levels of risk tolerance and your goals. You can reach Betterment at www.betterment.com. Now, to open an account with Betterment, you don't need anything, okay? You just sign up, you can open an account. There's no minimum deposit required. So that's a huge difference between Betterment and WealthFront. WealthFront, you need $500. Betterment, you need zero money. They do offer individual and joint non-retirement accounts, Roth, traditional, and self-employment, and rollover IRAs, trust. They do automatic rebalancing all their accounts. And of course, you can link all your accounts to theirs. Betterment management fees. The company has two plans, each with a different management fee. You have your Betterment Digital, which charges 0.25% annual. You also have your Betterment Premium. That's Betterment Premium, 0.40% as your annual fee. And the difference between the two services, why Premium is more than your basic digital, is because you have a team of certified financial planners for account monitoring, plus unlimited phone calls and emails. So as I said before in the introduction of this podcast, some of these have the option free or some services that may cost for you to talk to certified and licensed financial planners and investor brokers. Their promotion is up to 12 months of free management. Their deposit up to $15,000 or to $1 less than $100,000. That's $1 less than $100,000. That is $99,999. And you get 1 month free with their manager accounts. Okay. Accounts $100,000 to $250,000 or $249,999. You get 6 months free. You get 6 months free. If you open your account with $250,000 and above, you get 1 year free. That's their promotion they're running. Also, if you refer a friend and that person funds an account with any sort of money, you will get 1 additional month free, and your friend will get 3 months of free management. That's 3 months for your friend and 1 month for you. Their tax efficiency, they do include daily tax loss harvesting on all taxable accounts. They also have tax coordinated portfolio tool that allocates assets across retirement and taxable accounts according to tax impact. Now, tax impact is a preview tool that warns them about the tax effect of portfolio changes. So if this is speaking a bunch of jargon, guys, it's basically tax software, part of their algorithm that helps you with tax efficiency, okay? It helps you to minimize paying taxes when you're doing these investments and to help you reinvest any additional money you may have left over. That's basically it. Help you to save on taxes. Betterment Financial Planning. Now, this financial planning, it offers certain packages, right? It's targeted to specific life events. For example, $200 will get you a college planning package. Includes an hour on the phone with a certified financial planner to talk college saving strategies. The 5 packages range from $150 to $400. Okay, the packages range from $150 to $400, and it covers different topics like getting started, retirement planning, goal-based spending, etc. The amount of time that you will get with a financial planner, it actually varies on the package. Moving right along, this part we're moving into goal-based savings. Okay, goal-based savings. When you're starting up your Betterment account, it takes you through a process. And it wants to know your goals. It's sort of an exercise that they use. And it factors in your age and your current income. And then it suggests a series of goals based on your answers. Estimating a safety net of 3 to 6 months of expenses, a retirement savings target, and general investment goal. Each goal comes with a recommended target and asset allocations. You can also add other personnel goals that will dictate the account types used and the way your money is invested. So they have all these different options inside of their software, And these are great options, especially if you was looking for something on these lines when you're talking about goal-based savings. They also have a smart saver. Okay, a smart saver. And some of you like, we always using these zinger words like smart tech, Hey, anyway, smart saver. This is basically a high yield interest account or a high yield savings account that the expected returns are around 2.44%. That's 2.44%. But then it drops to around 2.19% after the fees if you're in the digital account, and about 2.04% after the fees for people with the premium accounts. And it's great to compare their saving interest rates with other online high yield savings account. In my opinion, that's not some great savings that is being tacked from fees of that amount. So you can do better. And by the way, as well as WealthFront and Betterment, their savings accounts, their high yield savings accounts are covered through the FDIC. Again, WealthFront was $1 million, and with Betterment, it's your basic $250,000. Okay, $250,000 for the insurance on your savings account with Betterment. Betterment Retirement Guide. It lets you link your non-Betterment accounts, including your 401ks, giving you a big spectrum, a big picture of all your investments account. Now, with this information, you can do certain levels with comprehensive retirement planning, right? It helps you to build your own advice platform of what you're going to take the next steps in. It also helps you to answer questions about whether you're saving enough money for retirement or not. So those are great options for you to look into. Last but not least, with Betterment, you have your charitable giving option. Yeah, Betterment also offers a charitable giving tool that gives customers a tax-efficient way to donate appreciated securities to charities directly on their Betterment platform. So if you want to give a portion of portfolio, a piece of the pie, as M1 Finance, which we'll get into, will say, that will help with your deductions and lower you in the lower tax bracket, which in turn lowers your taxes and may increase your return. Moving right along, guys. WealthSimple. WealthSimple, not to be confused with WealthFront. This is WealthSimple. The cool thing about WealthSimple is that this app is for Canadians and U.S. citizens. So if there are any Canadians listening, this is for you as well. WealthSimple. Now for the U.S., this app is brand new. It started in 2017, but of course, it made way in Canada and transferred over to the U.S. Now with WealthSimple, the exact mix of growth, international, fixed, income, cash on other asset classes, it's all based on answers to questions about financial goals. For customers who may be adding small amounts to their account over time, WealthSimple buys fractional shares of ETFs, which means your entire deposit can be invested in full instead of hanging out in low interest bearing cash. So that's a great thing. Now, WealthFront, Betterment, and also WealthFront, they all do fractional shares, guys, because when you putting those monthly amounts of money in there, all of that money has been invested in a lot of fractional accounts. To open your account, you don't need any money just to open it. Like WealthFront, you needed $500, right? And not to actually open it, but to start investing. With WealthSimple, you don't need any money to open your account, but you can invest with no money. So there you go. They do have individual and joint non-retirement accounts. They have Roth, traditional, and self-employment rollover IRAs, trust, and they have custodial accounts. That's for your minors under 18. You can open an investment account for them. WealthSimple management fees is 0.5% for balances with $99,999. Okay, that's 0.5%. For accounts that are above $100,000, the management fee is 0.4%. So that's only 0.1% less than if you had less than $100,000. WealthSimple promotion that they're offering at the current time is that the first $10,000 is managed free for 1 year. Now, I don't have a WealthSimple account But you can go over to Nerd Wallet. That's Nerd Wallet. And when you go through their promotion, you will see that you can invest $10,000 free for 1 year. That's $10,000 to be managed by them free for 1 year. Also, WealthSimple, just like the other investment robo advisors, have free tax loss harvesting, okay? It's a strategy used to lower an investor's taxes on investment gains or other income by offsetting it with investment losses. Often it is either a paid on service or it's for your high level, high net worth clients. But with them, any WealthSimple customer with a taxable account can have a portfolio analyst review their accounts, including those outside of WealthSimple, for tax loss opportunities. Through their strategy, they also offer your free tax loss harvesting for WealthSimple Black customers. That's WealthSimple Black customer. It's kind of like your Black Card customers. You know how it is. If you got the word Black in there, then there's high level stuff, just like the Black Card, which I guess a couple of banks. No, it's American Express Black Card, guys, that supposedly has no limit, but it has a limit. Also free for WealthSimple basic customers by request. So if you're a basic customer with WealthFront, you can actually ask for it by request. WealthSimple financial planning. Now, most robo-advisor services limit the amount and kind of hands-on help that they offer with their customers. Only a few of these really offer this service. Now, WealthSimple allows all customers, regardless of account balance, the chance to set up a phone call with one of the company's certified financial planners. This kind of access may be another reason why WealthSimple's management fees runs higher than some of the competition. Their fees are higher than everyone else, but they are offering and giving up a certified financial planner to help you work through your investment account and your portfolios for you to gain the most money. They also have service extras that really get into their concierge program, right? Concierge. And I don't mean to the point where they're being catered to, but yeah, you're being catered to. They have VIP Priority Pass membership. This complimentary perk for WealthSimple Black clients, it gives unlimited access to more than 1,000 airline lounges in 400 cities around the world. So if you're one of them Black level customers, here is a great perk for you. Moving right along, they do offer what they call their smart savings account. They're offering high interest, high yield savings account for the money you're not investing for the long term. They offer 1.75% interest rate. Now, you can get a lot better with other people. And like I said on my first podcast, those high yield savings. And I won't get into detail about the smart savings account because it's really not that good. But if you want to know the information, no matter, here it is. See, far away from everyday spending cash, you could be tempted to spend your money. Note that the company charges a 0.25% management fee on this cash, deducted from your balance at the end of each month. So, I hate to give out bad information, but there it is. With the money you have in there, they're going to give you 1.75%, but at the end of the month, they're taking 0.25% to manage your smart savings account. Smart? That's not smart. That's a dumb savings account, in my opinion. It's my overview, so it has a little bit of bias inside of it. They also offer a roundup feature. This is great. A roundup feature like Acorns. We'll get into Acorns later. Now, this tool puts your spare change to work by rounding up purchases paid for with a linked credit or debit card and automatically depositing the money in your WealthSimple account. Now, this is a great way to keep the investment momentum going and a reminder that even small money counts to big dollars. WealthSimple free portfolio review. Now, this is another good thing that WealthSimple is offering. You don't even have to be a WealthSimple customer to cash on this particular offer. The company offers a free portfolio review, which you can get by uploading the latest statement from any of your current investment account. WealthSimple analysts will check your investment allocations, account fees, and tax efficiencies based on your goals and time horizon and call to discuss the findings. This is a great option. It's totally free, and you don't even have to be a WealthSimple customer. But we know that this is just a jingle. This is just a treat. This is just bait. So they can offer you something better and get you inside of one of their accounts so you become a future customer. Little bias. Custodial accounts. Now they offer your UTMA and your UGMA sort of custodial accounts. These are types of trusts that are specifically designed to hold and manage assets for a minor until they reach the age of 18 or older. These account types are easy to set up and cheaper to manage because the terms of custodial accounts are already predetermined. Some of the notable terms are as follows. For this next portion, I'm going right out the NerdWallet handbook, and I'm going to give you this information. The first $1,050 of income in custodial accounts are tax-free, and then our equal portion is taxed at the child's preferred tax rate. Income above $2,100 is taxed at the parent's rate. Deposits into custodial accounts are irrevocable. The funds are turned over to the child once they turn the age of 18 and can only be spent for the benefit the child in the meanwhile. Donors are also prohibited from withdrawing money back from the account. You can choose to make your custodial account in a uniform gift to minors, that's UGMA, or a uniform transfer to minors act, that's UTMA. The main difference between UTMAs and UGMAs is that UTMAs can hold a wide array of assets, including real estate, while UGMAs can only hold cash, stocks, and other securities. So if you're looking to start your young one out with an investment account, WealthSimple has custodial accounts. Moving along, guys, we're moving right on to Acorns, Acorns have ETFs from up to 7 asset classes. Investment mix covers U.S. stocks, foreign stocks, emerging markets, dividend stocks, and real estate. And their website is www.acorns.com. Now, in order to open an account, you need $0. You can just open an account. You'll have nothing in there. Just like a lot of banks, you can open an account and don't have any money. Then some banks require you to open up an account with like $20 or $50. But anyway, with Acorns, $0 to open the account. But in order to start investing, you need at least $5. You need $5 to start investing, which is not a lot of money, guys. I don't care if you're working McDonald's or Burger King. $5, you spend that walking down the street. Now, some of the accounts that they do offer, they have your individual non-retirement accounts, Roth traditional IRAs. That's your individual retirement accounts. Acorn management fees. They charge you $1 a month for taxable investment accounts, $2 a month for individual retirement accounts and investment accounts, $3 a month for checking account plus investment and retirement accounts. Now, the promotion that Acorns is running right now is free for all college students with a valid .edu email address for up to 4 years from sign-up date. Think about that. Free for all college students for 4 years. So from freshman to senior, you could be stacking cheese, making money with Acorns, especially when you're using one of your credit cards. Is going to round it up and invest that money for you as well. Now, unlike the other Robo advisors, Acorns does not offer any tax efficiency, right? It doesn't. They do offer that roundup, okay? Acorns Roundup. Let's go right into that. Acorns Roundup, it actually sweeps the excess change from every purchase using a linked account into an investment portfolio, so your debit or your credit card. You can connect as many cards as you want, though all roundups are taken from the same linked checking account with each purchase. Acorn rounds up the nearest $1 and gives you the option to transfer that change into an investment portfolio. You can do that either automatically, so every purchase is rounded up and the change is transferred, or you can do it manually by going through recent purchases on the app and selecting which roundup to transfer. So roundup with Acorns, just as WealthSimple had a roundup service. Acorns partnership. Acorn partnership with more than 200 companies, and some of these companies are pretty big, like Apple, Hulu, Amazon, Airbnb. This was designed to give you cash back when you use a linked payment method as one of your partners. So in most cases, you get the cash back automatically without an additional step. You simply use a card linked to an active Acorns account to make the purchase. And then the found money rewards will land you an account in 60 to 120 days. So you're getting money back, basically cash back. Now, Acorns do offer customer support through phone, email, and in-app chat support. Okay, their user response time is anywhere from 48 to 72 hours, but a lot of information is easily available on a website. I've never had to, when I had an Acorns account, I don't have one anymore. I used to use the email option, so which they will get back to me within 2 days. So it wasn't a bad option. It was actually really good customer support in my opinion. Moving along, we have Stash. Now, Stash is one of my favorites. I currently still have a Stash account. And with Stash, you invest in up to 60 ETFs, and they have about 150 individual stocks that they have available through their app. Now, even though a lot of people may think that Stash is a Robo advisor, it really isn't. But I had to throw it into the Robo advisor category because they don't really have a brick and mortar. But they don't really have proprietary algorithm software that's doing all their investing. They actually have real people behind the scenes. As we get into some of the details in the accounts, you will understand the fees. And you can reach Stash at www.stashinvest.com. Now, in the description, I have my referral code because as you will see, to open an account with Stash, you need $5 to open that account. Now, when you use my referral code, they give me $5 and they give you $5. That's right. When you open your account, they give me $5 and they give you $5 using my referral code. So it gets your account up and running. Now, the type of accounts that they offer are individual non-retirement accounts, Roth, traditional IRAs. They do not offer automatic rebalancing, but they do offer custodial accounts. As we said with WealthSimple, they offer your custodial accounts. And the reason why I love Stash is because of their interactive interface that also teaches you how to invest. They have a Learn tab that you can go in and learn everything that you pretty much need to get started to start investing. And out of all of my apps with investing that I'm using, Stash, I'm getting the best returns. Like, you pick out your portfolios and you watch your money grow. Stash management fees. For accounts that are under $5,000, you pay $1 a month. That's only $1 a month. Now, some people may think that's a steep price in reference to these other robo-advisors, but don't forget, Stash is not a true robo-advisor where it's just computer algorithms investing for you. They have people behind the scenes. So if your account is under $5,000, you're going to pay a $1 monthly fee. So if you got Netflix, $15 a month, $10 a month, this is nothing compared to what you're paying for your services. Now, for any accounts that's $5,000 or more, you pay 0.25% of that amount. So if your account is over $5,000, you pay 0.25% of that amount. Stash do have a promotion. Your first month is free. Now, retirement accounts are free for people under the age of 25. Okay, they're trying to help you to get started. They're not trying to rob and rape you right off the bat here. They're trying to get you started up until the age of 25 so you can start investing for your future and not pay anything. Now, for every person that you refer, and like I said, I have my referral code in the description. For every person you refer that opens up an account, they will give you and me $5. I'm saying you and me because you and me going to get $5. Now, they have no tax strategy help, no tax loss harvesting. But the cool thing about Stash is really for your millennials and your teenagers because the ETFs and portfolio names are really catchy, but they do tailor them to the sort of portfolio you get yourself in. So Stash renames the ETFs to better reflect their holdings. For example, the SPDR SP Biotech ETF is called Modern Meds, and the Vanguard Small Cap ETF is called Small But Mighty. Those are just examples, and some of the categories to help you diversify and invest your money once you go inside their website or their application. They have I believe, I want, and I like. Those are just little catchy things they use to keep people interested. Stash has, one of those low account minimums, only $5. And you're thinking about, well, how can I invest with only $5? Because they invest in fractional shares. That means that all of that $5 will be invested. It will be invested because when Stash buy their stocks from the stock market, they break them up in fractions and then they resell them to you so you can do fractional shares. That's it basically in a nutshell. And what that simply means, you can build a diversified portfolio with very little money. Stash has Roundup. Yes, Stash has Roundup. If you like the idea when it came to Acorns and also WealthSimple, if you like the idea of investing without too much effort, Stash will round up your purchase to the nearest dollar. And then when it hits $5, it will send the money to your investment account. When it hits $5, it will send the money to your investment account, which is very similar to Acorns. The app also offers a Smart Stash. And Smart Stash is basically their savings account that really doesn't compare to any of them. And we won't really get into that. Last but not least with Stash, you have Stash custodial accounts. And that's basically, again, parents who want to help their children get started with investing. You might be interested in one of those Stash custodial accounts. They offer customer support through the phone, through email, and all of that information is listed on their website. Their website is in the description. All right, guys, moving right along. Free. M1 Finance is free. Now, it has nearly 2,000 ETFs available for you to choose from, as well as individual stocks that are available on either the New York Stock Exchange or the NASDAQ. You can go to M1 Finance at www.m1finance.com. That's www.m1finance.com, and it's free. Now, to open your account, free. It doesn't cost you anything. You can open your account with no money at all. Now, in order for you to start investing, it's not like Stash or some of these others. You need at least $100. So with $5, it won't cut it, guys. You need at least $100 to start investing. The accounts that they offer are individual and joint non-retirement accounts, your Roth, traditional, and self-employment IRAs, and rollover IRAs. It also offers trust. No automatic rebalancing. That's no automatic rebalancing. Now, management fees, zero management fee, and zero trading commission. That's $0 on trading commission. You pay nothing for trading stocks with M1 Finance because M1 Finance has ETFs and individual stocks. Now, with their fractional shares, M1 Finance will maintain your pie allocations using fractional shares, thereby fully investing your money. Because with a little bit of money, you can invest in fractional shares. They do offer automatic reinvestment of funds. Once your account has at least $10 of cash available, it will automatically be invested. Automatically, so you don't even have to worry about it. And then the promotion they're running when they first started, and as of today, which is April the 8th, 2019, invest for free. That's their promotion, invest for free. It doesn't cost you anything, okay? They offer no tax strategy, no tax loss harvesting. But let's talk about these pies that everybody talks about with M1 Finance. A lot of people love M1 Finance. First and foremost, it's free. Second of all, they do things in pies. And each pie slice is a collection of different stocks and commodities up to 100 slices. Okay, that's the basis. That's when you sign up. You go through some pre-selected investment category, and each pie is a collection of as many as 100 slices. And now each slice represents an investment stock, an ETF, or it may even represent another pie. The pie then becomes a tool that you would use to manage your portfolio. It helps you to look at your money in a different sort of way. So it's a tool that you can use to help you. Now, M1 Finance has more than 60 pre-built pies for you. So you can just take an hour or two and go through there and see where you really want to invest your money in one of their 60 pre-built pies. You can also customize them by adding any stock or ETFs that trades on the New York Stock Exchange as well as the NASDAQ. So basically they're saying You can build your own pie. You can make your own pie. You can bake your own pie. You can do your own pie. Now, the new option that just started not too long ago, this new option that M1 Finance has is called M1 Borrow. M1 Borrow. And it gives you a line of credit with an APR of 4.25%. Now, in order to qualify, you must maintain a margin brokerage account with a balance of at least $10,000. You can borrow up to 35% of your portfolio. So again, to borrow against your account, just like Betterment, if I'm not mistaken, you can, with Betterment, I believe I said 30%. With this one, it's 35%, and you need at least $10,000 in your account. So it's charging you to basically borrow money from yourself, but they're going to put that interest back in your account. M1 Finance, with all its free stuff, threw a borrow in there. I guess they're trying to make a little more money, kind of like similar to Robinhood Gold, which we'll get into later. They do offer free consultation, okay? You can call in and consult with one of their product specialists who will show you around the platform and discuss how it would benefit you. Now, through that, you could probably sneak in a few stock tips, hey, where I should put my money? What's the best spot? What's been showing the best returns? That's how you get that information. You say it really quickly. And of course, they're there to help you. I do have an M1 Finance account. Again, I started with them a couple months back. I didn't really expect the returns. So I put my money out, put it back in, but I think I'm going to stay with my M1 Finance. It's free with all my other investment accounts. Okay, guys, moving right along to the last and final Robo advisor that helps you to invest is no other than, drum roll please, Robinhood. Now, I didn't leave the best for last. Robinhood is just another option for you to sink your teeth into the investment and make a little bit of money on your money. Robinhood has over 2,000 ETFs available for you to choose from, as well as all the individual stocks that are available on the New York Stock Exchange, as well as the NASDAQ. And you can go over to Robinhood.com, or you can use my referral code, because with their promotion, if you use my referral code, you get a free stock and I get a free stock. That's right, guys. You don't need any money to open an account. It's totally free. And you can even start off with a free stock. Now, these stocks are not your Apple or your Amazon, nothing like that. But nonetheless, you'll be a fractional shareholder of a company, and it's free money if you cash it out. Okay, free money, free stock. You can use my referral code. We'll both get that money. Now, the types of trading that they have, as well as the ETFs and the individual stocks, they also offer option trading. I believe Robinhood is the best way to go when you're talking about option trading, as well as cryptocurrency trading. And they also have American depository receipts for over 250 global companies. And it's free, okay? It's free. Individual stocks that you want to buy with no commission price, and your ETFs, no commission price. Option trading, when you're buying 100 plus stocks at a fractional share to see if it will gain interest or lose, and you sell it before the end of the date. Now, if you want to get into option trading, you might can go to Investopedia, NerdWallet, Bankrate. Some of these websites out there have great information, or you can go on YouTube and look up Ross World, and I have a video on option trading. I just want to give you some options. Now, again, as I said before, to open an account, you don't need any money to open your account. But in order for you to start investing, you need money to buy a stock, okay? So whatever amount of money you need to buy the stock you want, that's the amount of money you need to have in your account. They offer individual non-retirement accounts, and they have a really great trading platform. And a lot of people try to verse Robinhood versus M1 Finance. And essentially M1 Finance, everything is free, except with the new M1 Borrow. And I think they're looking at Robinhood's platform. They have a huge platform with a great pies that they've created. But with Robinhood, they know about Robinhood Gold and how Robinhood has basically borrowing money to the people so they can invest their money into stocks and they get interest from that. Again, not a comparison, just an overview of those two investment robo advisors. Management fees, they have zero management fees and they have zero trading commission. Okay, zero trading commission. I believe that the only fee they have when it comes to these particular fees is 75% account transfer fees. That's outside of Robinhood. Then in order for you to borrow with that Robinhood Gold, you need to have at least $2,000 in your investment account. So basically, you drop $1,000 in there, but you want to switch it over to Robinhood Gold so you can use their money to invest and make profit. That won't occur because you need at least $2,000. So Robinhood Gold, in a nutshell, it offers investors the ability to trade on margin, okay? Also known as borrowed money, as I stated before. The opt-in service carries a flat monthly fee based on your margin or buying power, as Robinhood calls it. And it's different for everyone. And again, that information is located at Robinhood.com. But new investors should be aware that margin trading is risky. Let me tell you guys, if you don't know what you're doing, don't do it, okay? Make sure you have some experience. Make sure you read up. Make sure you do your research. I would say over and over and over again. Don't just go into investing willy-nilly unless it's one of these other robo advisors. They're kind of user-friendly in a sense and give you the bottom line up front. Robinhoods are basically for intermediate to advanced and expert investors who know exactly what they're doing. Or if you're a novice investor and you know, hey, I know this stock always does 7% a year, so I'm gonna buy 100 of them. Something on those lines, but you're not really an expert, okay? When you refer a friend, you get a stock and they also get a stock. My referral code is in the description of this podcast. Customer support, they have it only through email, Monday through Friday. Now, moving right along into a different segment of our podcast, which is the shortest part of our podcast, is account protection. All of these robo-advisors and Stash, they offer account protection through the SIPC, the Securities Investor Protection Corporation, SIPC. Now, this is protection just like your FDIC with your savings account, but this is meant for your investment account. And this covers up to $500,000, that's $500,000 in your securities, $250,000, that's $250,000 in cash, and that helps you against broker failure. All right, everyone, that's all I have in this segment in Everything Money. Tune in next week. We will be discussing Fundrise and Rich Uncles. They are REITs, those real estate investment trusts. So tune in next week to get that information to make your life better than it already is. This is Everything Money, where we break down complicated financial information and we give it to the people financially free in a common sense way. This is your host, Ross World, a.k.a. Ray Ross. I'm out.